India's overall export story. India's overall exports may grow by 10 to 15% in financial year 25. Industry body projects goods and services exports will touch about $900 billion. Now, Indian exporters anticipate a 10 to 15% increase in goods exports despite challenges in global markets. Total exports are projected to touch $900 billion this year. Last year, it was $780 billion. Now, while goods export are expected to increase about $500 to $510 billion. Services exports may be a little sluggish at $390 to $400 billion. Karthik continues to be with me. Karthik, what's really happening here? It does look like, being from an exports or services driven economy, goods will continue to dominate majority of exports out of India.
In fact, that has been the case even last year, Shweta, and for many years preceding that as well. So while services is India's speciality and India's calling card, and there is fewer number of countries out there that compete with India when it comes to services exports, especially IT services, we have enough and more competition on goods exports. So this number of 900 should have ideally been reached last year had global events not turned out the way they did turn out. And I think even this year, to grow at 10 to 15%, reaching that $900 billion depends on a lot of domestic factors as well as global factors. For one, we know that PMI has come in strong month after month, which means that overall the industrial activity, both in manufacturing and in services, has been fairly robust, which means you're on the right track. We are on the right track, but is there going to be enough demand that comes for India's services as well as goods exports in this year is something which is yet to be seen. Remember, we are still not out of the woods when it comes, or rather out of the seas when it comes to the crisis in the Middle East. So Red Sea trade routes continue to be a challenge for India. Freight costs continue to be up, right? Gold already is at an all-time high, which means that governments and citizens across the world are shoring up gold reserves because they really don't know which side the crisis is going to eventually fold or unfold. Number two, you are also looking at US data, not very confident. We were hoping for rate cuts, at least 6 rate cuts this year, tamed down to 2, at least 1 rate cut this year. Talks of that are also now gradually moving, perhaps in a neutral stand, if not a certain hike in rates before they start falling again, which means global demand of services from India is going to continue to be tepid. Now, given that IT forms a major share of India's services exports from India, that story could be the last really to pick up. So the Indian government is actually keen on other engineering services as well as healthcare, etc., to talk about the increase in exports when it comes to services. But on manufacturing, it's a different ballgame altogether. So China is recovering much faster than we had anticipated it to. And China's growth coming in at about 5.2%, beating all estimates, suggests that manufacturing activity in China for exporting to the rest of the world may actually pick up to compete with India much before India's own manufacturing story shows up. So add to that India's own domestic issues. We need a good monsoon, definitely, right? We need some sort of capex to kick in from the private sector, and that is going to be dependent on the data that comes up from elections next month. So so is there going to be continuity in policy or not is going to really pave the way for whether Indian companies are going to make those investments to manufacture more and more of what is then the second question, because PLI schemes, etc., other incentives are going to kick in after a new government takes office in the month of June this year.